So welcome back guys, this is Aman. Welcome to Traders. So in this video we are going to see how to use the Nivesh Yantra, that the our favorite indicator for option buying. So basically Nivesh Yantra is designed to help traders to identify high probability entries with the proper risk management and trend confirmation. What does it mean? If you will see, suppose a daily time frame of any index or stock, suppose that, let's see, Nifty. So in Nifty, if you will see, currently we are in a sideways market. But when the markets are trending, you can see here, the markets are trending downside and then upside. So these are the trending markets of downside. So here, our best trades are sell on right. So we have to find a particular setup from where we can use the selling. So for that, we always want a selling setup because people always find difficulty to find a good setup at selling areas. Suppose the trend is bearish, so we must try our bearish setups. Like here it is a bearish setup. So this is a kind of bearish which is a red zone. So after sending a red zone, so it is going down at its given a target and a stop loss also with a risk reward of 1 is to 3. So the simple thing is to use this indicator is very easy. First of all, you have to come on previous day trend. Okay. So check it the previous day candle. Okay, you can see PDC or not, it's a close, it's a candle. So basically we will check the candle of last day and what does it mean and what's the behavior. So always check out what's the closing point and the PDC means here. So PDC is a previous day candle and previous day close. If the previous day close is, suppose that, is below the previous day before yesterday's closing, means what? Here you can see last day was a bearish. Okay, so this was the day on Friday, and before Friday on means on Thursday we were having a bearish candle, means bearish closing. So bearish closing shows sellers are active at this area. So on smaller time frame, you have to focus on bearish setups. Whereas if the candle is bullish, suppose if the candle is bullish here, like in this type of area and in a trending market, like this kinds of area from here the bottom part, so you can see the trending markets are always showing buy on dip, like here these are the bearish or bullish closings. So if you will see at the bottom also, if you will check it out, so we are getting sometimes bullish closing. Same way here it is a bearish closing and then it is following a downtrend. So these types of candles means on the basis of red color or green color means whose dominants are there in the last day. You can also take the referral of the weekly time frame. On the weekly time frame also, if you will see sometimes the weekly time frame like bearishness is there and here also fall is continuously. Here the trend is bullish, so you have to see on multiple from bigger time frame to smaller time frame. Now on Friday we have a bearish opening, means gap down. So in that sense, what will be the best setup for the bearish opening? So in the bearish opening, there are two types of opening. One is the gap down or flat opening also. So flat opening or gap down. So gap down is an event, means this event where the gap down happens is not a common event. Okay, it's you can add as a institutional event, institutional event which is made by big players because the gaps are not created by retailers. Now, those who have take the overnight positions in the call side or put side means here those who have taken the put side trade in the overnight, they are mostly going for the profit booking, and after a gap down you will see either the market sometimes recovers or it will remain a sideways, and after that it can go for the upside. So this is the common mindset of a trader, because after a gap down we usually wait for the markets to give proper signal for the bullish setup to take upside. Also after going upside then we sell from higher levels because the major trend is bearish and this is a pullback. So you can make a mark that dots means this is the trend of gap down and this is the pullback, and the pullback and then again the trend continues in the downside. Now if you open the Nivesh Yantra indicator, here you will see on the settings part there are four types of this style. You can untick or remove it. I will tell in the later videos how to use it. But currently for the Nifty option buying, you have to just untick it and try to just focus on the charts. So we are on a 3 minute time frame. Basically, for an intraday trader, those who want to do intraday trading in option buying, they can use it on a 3 minute time frame. Other people, those who want, they can use it on 5 minute also, 15 minute. Means whatever time frame you like, you have to follow your own set of rules and risk reward. There should be nothing. Meanwhile, if you will see at the top level here, here it is showing bullish, bearish, and 3 minute bullish. What does it mean? It means what does the candle shows on bigger time frame, means on hourly time frame it is a bullish. So means what you will can see here the hourly candle. Let me show you on hourly time frame. The Nifty candle has closed in bullish, means last candle there was a bullishness, last candle there were bulls dominating. Now on 30 minute, just shift the time frame to 30 minute. So you will see here on 30 minute there was a small fall, means what, means bigger time frame, the bigger time frame bullish, and in smaller time frame means just before 30 minute there is a what, bearish. Means if suppose the trend has come to an end, so it is taking a u-turn and after that there is a pullback. So this is type of a bearish, the fall is a pullback. Suppose market wants to again continue the higher time frame because we follow the high time frame. So here now onwards you can see on the 3 minute there is a bullish time frame, means bullishness is there. So you can see here we have got some bullish signals also. So you have to correlate with it. But on the bigger like the last day trend was as a bearish, so you can see we have got a bearish setup. Also we got some bullish setups, but the good setup was what, after the gap, means this was a gap down event. So we should have tried for the bullish setups, like we can buy for the from the bottom and after the bottom area. So whenever there is a gap down, most of the uh, there is a profit booking. After the profit booking, people covers their book their profits. Also they book their losses, those who have hold the call option. So there was a, so there is always a type of like covering move, and the market always takes to the upside, you might have seen sometimes. Because the major trend was what, if you will see the major trend in the last few days, what is the major trend, the major trend is bullish, and you can see the overall trend is also a bullish trend. So this type of, like, always see the major trend and this type of trend. Just focus on 3 minutes, and we have to see what is our RSI also. Here the crucial part comes of RSI, means whether the RSI is at lower levels or at higher levels. In the indicator, means in the signal also, you might have seen there is a signal, there is some markings called RSI. These RSI are just nothing. Those shows that the markets are means index at this level at RSI 51, means RSI above 40 to 60. If the RSI is going high of 60, so means what, the bulls are becoming dominant at this area. Whereas if the RSI is going below 30, and then so bears are there, means that time there is a condition where the market goes below the threshold. Like, suppose that two type of numbers, means RSI is a strength indicator. Suppose this is a 70 and this is a 30. So if the market goes below the RSI of 30, so this is a oversold condition where we should not place any selling signal, or means selling trade. And if the market goes above 70, we should not place any buying orders here. So always wait for the market to go below the R, means we have always saying buy in dip. So this is a buy in dip area. Means what? Where the RSI is lower levels, and this is a sell on rise. This is the area from where we are used to selling. So if you will see here, as the bias was last day was bearish, so we have taken a trade on the downside. Means downside trend will be a good trend. And in the same way, previously, if you will see here, on the bottom area, means after hitting the day lows, you might have seen here, this is the day lows, and you can see after clicking the liquidity of day lows, if you see any bullish setup at day lows, so these are the high probability area from where the market always recovers. And you can see some, means after getting this area, we have almost hit the good, means previously red zone. The red zones are the supply area. Supply area are the red zones, and the green on the demand zone. Always remember, whatever time frame you are taking, even 1 minute also, 3 minute, 5 minute, any time frame. Suppose on 30 minute if you are taking, so there are no setup because it is just a sideways market. Meanwhile, if you will see the day before yesterday, I will show you. If you will see at this area on 6th, after 6th April, we got a gap up, and after a gap up, we got a sharp selling. After the sharp selling, again we got some bullish signals, and then market shoot up. As said, the overall trend is of market is bullish only, and we hit this higher liquidity, and we hit this supply zone. So now the markets have, now the next demand zone is near 24,000. So you have to mark the levels or the demand and supply zones on bigger time frame also sometimes, and try to buy on dip and sell on rise. This is the main theory of this part. And most probably the candlesticks part, means the closing, means here is the bullish closing is there. So you have to identify on 3 minute, you should try for the bullish setup. Okay. If both are bearish, then try for bearish setups. I hope you have understood. Also, don't wait, don't hurry for always taking a trade. Don't hurry in always for taking a trade. Use for with the proper trend. Means if the trend is bullish, means last day candle is red, and next day market is going upside little, and then you get a sell signal. So we take on the previous basis only. Means if the previous day is red, so your current day will be sell on rise. This is the view. And the previous day is green, so your next day bias should be buy on dip. So buy on dip is will be for the green one, and sell on rise will be near the day highs or intraday highs. This is how we always make the money for the buy low and sell high. Also, if you will same follow the setup in the options chart, suppose that here we have got the bearish candle. So what you have to do, take the strike price, which strike price you will take, the take strike price which has the higher, means the stop loss, means if the high is near, if you will see the stop loss is here of red is 24,240, then you can try for 24,300 options of put side. So the put option you have to take it of 300. Also you can go for the options which have strike price above 200, means 190 or 200 or above. Always choose these strike prices which have the premium of above 200 in Nifty. Don't go for OTM trades or far OTM like 10 rupees or 20 rupees, even 60, 70. They have high, means high risky and low chances of getting to the targets, because sometimes the time decays and the premium will also decay. Now you can see here the option chart in the same time as I have shown in the Nifty. If you will see here on the Nifty chart also, at the same time the selling signal was came, and the Nifty also gave the selling signal. So just let me show you and I will compare it for your knowledge. So you can see here the selling signal came as the overall trend was bearish. So you can try for the sell signal. Don't try for the dip, because the near the day lows we didn't got the setup. Although some pullback came, then again pullback, so it was not able to find go highs. So this kind of markets where the OI data and majorly sellers were dominating at this area. So this was the area at 11:20, 11:15, and after the 11:15 you can see here same candle at 11:15 we got the setup in this put area, and then we got the stop loss and target respectively, and this stop loss and target have gone to this area, means what, our stop loss was 194 and targets were near to the 241, and you can see the high is almost near to the targets 241. So you always take the buffer of 2 to 5 rupees, 5 rupees buffer you can take, and the risk reward was same, because here the percentage of risk is less as compared to the OTM trades which you are taking. Try to trade with 1 2 lots in the paper trading app. After going with good risk reward and risk management following setup, you can try at your own risk. See, the indicator gives setups, but discipline gives profits. Avoid revenge trading or over trading or fear entries. If you don't can't understand, you can ask me. I can tell you which side you can take and the probable area. So this is how we will take the entries and exits here. So those who want access of this indicator, even the Adani ports trade, which I have shown in the last video also, Adani ports trade I have got on this indicator, and we have taken the entry same in the live also. Let me show you. So this was the Adani Ports trade, and the entry was here in the above, because the buyers were having, means there was a consolidation, and after the consolidation the breakout was very good, and then on 3 minutes time frame we got the big buying signal, and then we have taken the risk reward, and the target for 1785 was this only, and we have reached the target. After reaching the target, again we can see here there was a sharp downfall, which is a part of a pullback, and because if you will see this rally pullback, and again the continue will be there on the next Monday. Now the time frame here shifts to the bearish as 1 hour, 30 minute and 3 hour, 3 minute. But suppose the Adani ports has closed in green, so our next day bias will be buy on dip only. You should not try for against the trend, because the trend was where bullish. You can see the stock, the trend is bullish, so you have to same think like that only. Trend is your friend and follow the trend only. Trade less, but trade quality setups like that. You can follow the bigger time frame also. In bigger time frame, you will get good entries at bottom areas sometimes, and that will give you high risk reward trades like that. Like here you can see on 1 hour time frame also we got the entry at here, and after that entry we got 1632 target, and you can see the target hits, and then we got hits to the. So you can try for this and just let me know how to see. This indicator is like a personalized indicator, and after giving you access here from show me your, you can send me your telegram, not telegram, trading you user id, and I will just add new users. And after adding the new users, suppose one is here, so suppose xyz amount, so here will be add access, and I will give it to you. And after adding it, you can let me know, and you can take the trial of 2 to 3 days and just do it for the backtest in paper trading app, which is front page. So this is all about the indicator, and the next part of the indicator I will make for option selling and other things also, futures and all. So thank you guys. If you want this indicator, you can let me know in the comments, or you can DM me at Tradesk, which is my telegram ID. Also you can contact me 7348657. This is my number. You can contact me here also for this indicator. I will give it the access to you. So for access, you have to share me your user ID of TradingView. So thank you guys. I hope your doubts are clear. The only thing is go to the settings. Here 90, this you all can switch off. Nothing else you have to do. No inputs, nothing you have to change. That's it. Visibility and all, you can use it. So hopefully this is a good educational video for you all. Bye bye, take care.